Alright, for this video I wanted to talk about refund anticipation loans, or RALs, and what are they, who generally kind of tries to take these things, and why, in my opinion, you should try to avoid them like the plague. So some of the basics here. What is a RAL? So a refund anticipation loan is an advanced tax refund that's generally issued by the tax return preparer that you have prepare and file your taxes. So what the RAL does is the tax preparer gives you cash the day of or the day thereafter, an immediate cash advance. So you get your cash immediately, and you do not have to wait for the IRS to process your tax return and deposit your federal tax refund into your bank account. Now obviously the tax preparer has to charge a fee for this service, and that's where these types of loans draw a lot of controversy, is the fees are outrageously high. So we look at an example here. We have John and Mary are married taxpayers, and they've got to file their 1040 for 2021. Now they go to a tax preparer, and the tax preparer prepares their 1040, and it shows that they're eligible to claim the EITC and the child tax credit. So their 1040 right now, before they push the button and file, is showing that they get a refund of $6,000 for the 2021 tax year. Now, here's the couple's options. If they file this return electronically, they put in their direct deposit information, they're going to get a tax refund from the federal government for $6,000 in around 10 days, right? I mean, it can take a little longer sometimes, but for the most part, you're looking at 2 weeks to get your tax refund. So they talk to their tax preparer, and the tax preparer says, well, if you don't want to wait 10 days, I can give you a RAL. So the tax return preparer can offer them a RAL, so they get cash today of $5,400, and then when that $6,000 clears, they keep the whole $600. So when you look at the breakout here, they give you $5,400 cash, they keep your $6,000 federal tax refund, so the difference there is the $600 in processing fees, right? It comprises the loan application fee, the interest, a few other things, but they're basically keeping $600 or 10% of your total loan. Now you might be looking at that and say, okay, well 10%, a 10% fee, is that really that bad? Well, when you look at it on an annualized basis, because this is a loan, right, the effective annual rate is over 400%. Right, because they're taking a 10% fee, but you're only getting a loan for 10 days. Okay, you're not getting a loan for 365 days, you're getting it for 10. And so when you look at that 10% fee up front, the annual percentage rate, the APR here, effectively is going to be over 400%. So this is why RALs have come under a lot of scrutiny. Federal and state governments are trying to clamp down on these. There have been some moves to try to cap the APR at less than 100%. I mean, if you think credit cards are bad at 25% interest, look at a loan through a RAL, right? 400% effective interest rate. I've seen some as high as 600% rates on RALs for taxpayers. So they're pretty ugly, in my opinion. I don't do them as part of my practice. I highly recommend taxpayers avoid these things unless you can get a RAL that's got reasonable rates. I mean, if you can get a reasonable rate, then go for it, but I just don't see any. I only see rates that are well in excess of 100, normally in this 300 to 500 range. Again, I've seen some as high as 600%. So if you are having somebody prepare your taxes and they're talking to you about these RALs, I would avoid them. Just put in your direct deposit information and wait for that check from the federal government. Don't use an intermediary. Okay, so I hope that was helpful. Everybody stay safe out there, and hope you have a good 2022 tax season. Thanks.